Hello and welcome to Pro Trader Strategies Market Commentary for Thursday, July the 14th. My name's Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal, where I've commented on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these daily market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your own portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. Having that out of the way, let's get this on. Some economic data today. We did have the Bank of England come out and leave interest rates unchanged. They were expected to lower them from 50 basis points to a quarter basis point. That was a bit of a surprise. I think a lot of people were taken off by that a little bit, but it did cause the equities to rally, maybe thinking that England is better off for that. We also had here in the United States, PPI, which is the Producer Price Index, come in at 0.5%, was expected 0.3%, and we had the core PPI, which just kind of takes out some of the more volatile pricing instruments in there, and it came out at 0.4%, which was expected 0.1%. So those basically being good for the overall economy. We also had unemployment claims come in lower than expected, which is just an initial unemployment claims. At 254,000 was expected 263,000. Other than that, we have natural gas storages coming in a little bit higher at 64 billion cubic feet build versus the expected 61 billion cubic feet. On to the markets, /CL crude oil pushing higher up 68 cents after yesterday's big sell-off right here at the value area. But one real line in the sand that we really need to be looking at, and it's coinciding with the value area or the point of control low for the most part. As you can see, we've touched down on this right here at around the $44.50 area of crude oil, and it just cannot break through there. The bears really need to get below that in order to really start taking control. Otherwise, it's still looking like right now it's looking like a toss-up because we're right there at the point of control, which is the sweet spot for everybody, for the bulls and the bears. That's just where the most time and volume has been spent over the last several weeks. So on to gold. You know, we've talked about this before. Gold is going to suffer when the equities are, rallying. It's basically flight to quality. They're going to take money out of gold, which is more of a fear type trade. So gold is down over $11. It was down quite a bit more earlier on today. I think by about, I think it was down over 20 points earlier today. On to the bonds. As you can see, equity is rallying. It's going to hurt the bonds. Bonds have given up, on this whole thought that the equities were going to crash again. So bonds down over 2 points today with the equities rallying. It's just another flight to quality. Bonds, as equities go up, bonds should come down. And I talked about when we saw the bonds rallying and the equities weren't breaking, that you needed to be careful, and that's what happened a couple of times in the past there. So bonds finally starting to give up and giving way to the equities. As you can see here on the NASDAQ, up 18 points, but well off the highs of the day, came up and finally broke through that value area high. This is going to act as a resistance area, but they slowly failed on that. I've been getting short deltas because I didn't think it was looking very good. It's still not looking that great in my eyes for the bulls on the equity side. As we can see here on the E-mini S&Ps, I need to get rid of this Fibonacci. I might as well get rid of it now to realign that. But, we rallied up quite a bit, made another new high today, but the market has come back off, and these are really starting to wane for the bulls. The bulls are just starting to lose control, especially late in the day, and that's an indication to me that we're going to come back off. So my position, I'm happy with it, despite the fact that I'm getting a little bit beat up today because I put on a lot of short deltas yesterday. I mean, it's right in line. It's not too bad now that the market's come off. It was a little bit worse earlier today. But like I said, I'm more comfortable having these short deltas, especially at these historical highs. Just being the contrarian, we rally so much, I got to get short. So that's what I'm looking to do. With the E-mini S&Ps on the daily chart, 15-minute breakdown, as you can see here, /ES on the lows of the day session. Overnight, we rallied up quite a bit on the open. It's done nothing but just slowly come off quite a bit. I guess that leaving the rates unchanged in Great Britain, that euphoria is giving way to profit taking. The only thing that I've done in GDX, it is slightly below my line in the sand for the most part. It is, it's an ETF. So usually I say with stocks, the implied volatility percent needs to be above 50. This is just below 50, but because it's an ETF, there's a lot of different stocks in this ETF on the gold miners. So I decided to go ahead and just do a short strategy around this, a naked strangle, if you will. And I did the August 26.35 strangle, sold it for 69 cents. That gives me a lot of wiggle room, the 35 strike being way up here, the 26 down here. So I just did that because even if something crazy happens, I don't really foresee it going that much higher. Volatility being pumped into there still gave me some nice premium and allowed me to get really far away from the at the money. So that fit the bill on that. Friday's webinar, we're going to be doing it on the call Christmas tree, and it was a favorite on the floor. Back in the day, it's on toss. They still kind of call it a butterfly, but it's not really a butterfly. It's a Christmas tree. But that I'm going to go into all the rules of how to set something up like that. It is a bullish strategy, so we'll try and find some underlyings that don't have earnings in them and set it up for a bullish strategy. So stay tuned for that. You can go to protraderstrategies.com, sign up for that, or you can follow me at Wolfman's blog on Twitter. That's all I got for you guys today, other than if you can't take that, take it easy.